Well, hello there. If this is your first time here, I am Dr. Stock, and I'm back and I'm ready to rock. And for those of you who've been on this channel for a really long time, I'm going to throw back the intro. So for those of you who don't want to see that intro, just move forward about, 5, 7, 15 seconds from now, and that way you don't have to go through it. Ready, set, boom. I know that intro has been requested by some old-time fans of this channel, and I haven't done it since I've been back in 2023 after finishing my doctorate. In this video, I do want to talk about Tesla following the release of their earnings, since the last video that I put out on YouTube was about the Tesla stock price prediction and also the Tesla earnings prediction that I had out. And also what I want to do for those of you who watched that video or maybe are interested in the projections that I put out there, I wanted to compare it to Wall Street's estimates and just, take a look, especially across 5 key metrics, to find out exactly who the winner was. And then I also, at another point in time, I'm going to go and I want to take a look and see, back when I did the Q1 versus Wall Street, how my estimates for that compared to what Wall Street had, and see if the results were similar there. And then I can continue to make adjustments over time to make sure that the accuracy of the projections that I put out there continues to remains strong. All right. So with that said, in this video, I am going to be talking about Tesla. I am going to be talking about their earnings call that they had out there. I'll be showing the investor deck that we have. And I also want to bring up the spreadsheet that I made, and I want to show some of those comparisons, the estimates that I had versus the actual versus the estimates that Wall Street had. And then, like I said, look and see how it turned out. Maybe you can already guess that sort of ending. So in this video, I will be sharing with you the Moomoo app, so make sure that you take a look at that. Down in the description, you can find out how you can get up to 16 free stocks. But in the meantime, I do want to get right into the content that I have for you. So the first thing here is the Tesla Investor Relations page. So if you type that in for any publicly traded company, they should have a web page with investor relations. So for Tesla, I got the shareholder deck up and ready for you. So we go here and it gives the Q2 update. And I want to keep this video relatively short, but I did show you where to find this stuff if you want to go ahead and take a longer look through it. And so what we have, 9.6% operating margin. That is something that has shrunk significantly over time, and with the price cuts to EVs. Now, mind you, market share is a big consideration there. I think that's going to be the bigger thing. And there is a chart also in this that you can look at where we see that in Europe, we have a spike in market share for Tesla EVs versus the rest of the automotive industry. The United States still increasing, China still increasing, although at a slower rate than what we had before, but that's most definitely worth checking out at some point in time in this. So 2.4 billion in GAAP operating income, 2.7 in net income, and non-GAAP would be 3.1 billion. So looking very good for that free cash flow of 1 billion. And I do think that we're going to see significant spending coming up from Tesla. And Q3, Elon told us that the Q3 production is going to be slower because of some upgrades happening at its facilities. So when I show you my spreadsheet, I'll show you something that we have there, and that it's not necessarily too much of a cause for concern. However, when it comes to earnings, it is possible, and we're going to have to take a look and see what overall market sentiment has to say about anything. So if the sentiment on the economy changes, or if the sentiment on the stock market changes, those are macro factors that can affect the Tesla stock price. Possibly if sentiment on EV changes, that would be another thing that could change that. So those multiples are something that change over time, and it doesn't necessarily mean that Tesla changed significantly in their direction or as a company itself. However, it could be external factors that affect what the stock price is for Tesla when we look at it. Like I said, operating margin, and here you can actually, let me zoom in so you can see it better. There we go. Operating margin. It was up in the high teens. Now it's down under 10% operating margin. So that's something that is still weighing on investors' minds, I guess. If we look at this in the short term, and Elon also addressed that is not really a short-term game. He tried to refer to Warren Buffett and say, pick a company that makes good products and services that you can stick with for a long time and keep your money there. So basically, it wants to keep people invested, even if at the short term we take a hit. And that's why I want to say in this next earnings in Q3, when we have those earnings. So we just had earnings here at mid to end of July. So mid to end of November, probably around Thanksgiving, we should hear that again. And there's a lot going on here. So I'm just going to say it this way, that I don't know that we get a strong earnings for Q3 for Tesla. So this quarter come up, it could be a good quarter for them, but with the production hits that we have going on, possibly a further hit to margin, I think that maybe there is some hints there going on that, hey, it might not be incredible for us going forward. We'll see. Now, mind you, there's always the ability to surprise. That production happens to turn out well anyway. So that's something to keep in mind. And then also what to look for the price cuts, or what happens macroeconomically, what happens at the stock market. Last I looked, Tesla was trading at like an 80 PE, and I also have that in my earnings projection as well. So let me drop that down, and we'll actually go over to my spreadsheet. And since I didn't have it, the last video that I put up, I was on vacation actually, so that was something that was a little bit more difficult to share or work with. But now I'm back in the studio, and I have access to my full suite of technologies, so that also really helps out. So this is what I shared over at the Patreon. You can find the link for the Patreon down in the description. I had this up, I think, a week before earnings, so it was up July 12th, I believe, and earnings were on July the 19th after the market closes, and wasn't too far off from what it actually was. So this is Q1, this is Q2, is actually estimated. I should have had a little letter E here to indicate that these are my estimates that you have, that you can see. Like I said, I post these about a week ahead of time, and you can see the numbers. There we go. Deliveries, here's what I want to talk about before I get to the comparison with the what I have to the actual, and then also compared to what Wall Street had for several of the metrics that were out there, and how exactly that fared. So for deliveries, something that's really worthwhile to notice. So trying to get a delivery target of 1.8 million vehicles for 2023 that was set by Elon. He said if all the stars align, we'll hit 2 million. Right now it sounds like the stars are not aligning, but this is the first quarter deliveries, second quarter deliveries, and what that does to hit that goal, this is how many they need for the second half of the year. So if you divide that by 2, you get this average, and then you can split that thing up, and you can see that's actually a drop for Q3 of 2.3%. So they can actually drop in their delivery total in the next quarter and keep it even for the following quarter and still make that goal. So it is still possible to hit that 1.8 million vehicles, and honestly, I think that they will. I think that Elon's setting us up for a little bit of a slowdown in Q3, and hopefully we get that ramp in Q4, and hopefully we start to see the Tesla Cybertruck, by the way. Ooh, that's something I want to make sure that I mentioned. The Tesla Cybertruck starting to be delivered this year, as they said in the earnings call, with a much bigger ramp in production and deliveries in 2024. So fingers crossed that there's no further delays there on the Tesla Semi. But did you guys notice that they did give a Doctor Who shout out? I don't know if you noticed that or not. If you're a Doctor Who fan, if you're not, it's a BBC show that is delightfully cheesy and weird, and I don't know if they deviated that because I stopped watching after I think it's the Peter Capaldi Doctor Who that was out there. However, one of the jokes is about this time machine that's in there called the TARDIS, is that it's a phone booth, but when you step inside, it's like an entire huge spaceship, and so people always say it's bigger on the inside, and that's actually something that Elon said about the Cybertruck. He said it's big. When you get inside, it's even bigger on the inside. So I felt like that was a Doctor Who shout out, or maybe it was unintentional that it happened that way. But the point is that the Cybertruck is meant to be fairly compact in that it fits inside a 20-foot garage, and it's the only 4-door, 6-foot bed truck able to do that. And so that's packing a lot of truck into a little form factor, not quite little, I guess would be a better way to say that, but just efficiently used space. And he said lots of new technology, and demand is so far off the hook, you can't even see the hook, I think was his line that he had in that earnings call. So I am excited for 2024 to see that come out. And I do want to see what kind of impact, hopefully we get further guidance on what we're going to see for Q3 deliveries. We have just over a 2% cushion for drop in deliveries for Q3 to already absorb and still be on track for our target. As a matter of fact, if we take an even bigger dip and then make up for it in Q4 following the upgrades and re-ramp the production, it is possible that we even exceed this one. And I hope that we do. According to my projections, we're going to get about 1,837,000-ish deliveries in 2023. This revenue, by the way, I think this revenue, right now, we're not even halfway there, but we're close to halfway there. So we would actually need bigger revenues. Q3 is going to make that a challenge. It'll put a lot of pressure on Q4 to see that happen. Maybe we come in just shy of this, and I'm going to have to project that out and get that back out, and I'll do full year either based off this first half, or forward looking, of course, bring in some of the things that I think are going to take place for Q3 and Q4. But I will give an updated revenue on that. And so then I have my prices. So when I did this the last time, and I don't remember what day it was, maybe Wednesday or Thursday, just take a look at last week's Tesla stock price on the daily chart for its closing price, whichever one ended in 290.38. If we actually updated that right now, if I take just a quick peek at $270 is where it's currently sitting. So this would be more of a current price. Everything else is meant to be end of year. And something else that Elon said, he goes, he sees a path to possibly 10x, maybe 10x, but then he corrected and said 5x. And if we take a look for 2030, what I have here, there's 2030. If we go all the way across to what I have almost 400% gain, and 400% gain is the 100% you have plus the 400% on top of it. 1 plus 4 is 5. That's 5x. And so Elon sees what I'm currently seeing. So that's a lot of confirmation. So if you stuck around in the video this far, that you can see that. I hope you did, because I really do work really hard to bring these numbers to you and to make them really useful, super useful numbers. And when I say useful, I mean like useful to help make your decisions. Now, mind you, not everything I say here is going to constitute due diligence. It certainly does not constitute financial advice. But last earnings that they put out, took put option position and brought in, I think, somewhere around 90% on that put option position that I took in the last earnings. This one I brought home 25% on put option position that I had, because I thought that it would come in a little bit soft, that people would be a little bit disappointed. And I did say in my last video, if we see a run up to 300, this thing is probably going to sell off at earnings. And that's exactly what happened, is that we got that sell off from earnings. I think 299.02. We'll pull up Moo and we'll take a look at that in just a second. I do just want to show you the comparisons, and we'll move on from that. There we go. So here's the comparison between the estimate that I have in this column and the actual that is here in this column for Q2 for Tesla. And then the differences are listed over here. So that math is done for you. Just take one, subtract the other. So you can see I was off by 240 million for revenue. For auto gross margin, I missed it. I had almost 20%. They came in at 19.2%, a little bit up. And this was the big difference, was regulatory credits off by 300 million. And when there was only 282 million in the first place, that means that I was over double what I should have had there. So a goal that I have for the next one is to come in more accurately with regulatory credits. And we'll see what I can do about that. I think there's work that I can do to get more accurate results that would really fix a lot of things in this. So total gross margin, I came in at 18. Actual was 18.2%. And then operating margin, almost the 310 million that I was off on income from operations. I was off by 299 million on the regulatory credits. So that really does accommodate or explain, I guess, a large part of that income from operations that I was off. When we look at this figure that we have here, I missed operating margin by 1.1%. But like I said, a lot of that can be contributed to the automotive credits that we had, or the regulatory credits that we had. And then EPS, I missed the net income by 206 million. EPS, I was off by 6 cents per share, and I was also off by about 10 million on the average weighted share. So the fact that this actually went up, that there were more shares and it still came in at more earnings per share than the previous quarter, which is also 85 cents, by the way, is actually good for Tesla. So there were more shares available, more pieces of the pie, if you will, of the same pie, and still came in at a higher EPS. Always a good thing to see that growth. Now, how does that compare to Wall Street? Let me go over here. So we have difference, Wall Street in the winter. So what we have for revenue, they were off by $627 million, so almost $500 million. And so for that one, I won that contest. I was closest to the actual. And this is against the professional analysts. This is as per Bloomberg. When we look at this, they came in at 0.5% over the gross margin versus my negative 0.2. So I'm still closer. I'll count that as a win. Wall Street actually won operating margin. I bet you that they were much better at calculating those regulatory credits than I was. They came in at point. They were almost a full % off. And for me, I was just over a full % off. And then when we look at net income, and also when we look at the earnings per share, that I was able to beat out Wall Street on that one as well. Now, this does count as a one-off. I can't just win once and proclaim that I'm better than the professional analysts that are out there. This could be one of those situations where it just worked out better for me this time. It's being able to replicate and repeat those results that is really going to speak volumes for me and add a lot of credibility to this channel. But I did want to share that with you guys. And I do also want to go back and compare that to my Q1 projection versus the actual versus what Wall Street had for Q1, and see if it was a similar story there, or if it was a lot different. See if I was still the winner, if they were the winner. Because if so, I think that I really have Tesla nailed down well. And if it turns out that Q2 was a one-off for me, then I know that I just have, either way, I have more work to do to make sure that I have this as accurate as I can make it, given the information that I have. But right now it's looking fairly reliable. We'll see if it continues to be reliable for the third quarter when I put out my next Tesla stock price prediction for Q3 2023. And also my Tesla earnings projection, or my Tesla earnings prediction for Q3 2023 as well. So I did want to put that out there. I am going to switch over from this over to Moomoo so that we can talk about that as well. There we go. Now we're looking at Tesla stocks price action, and right here you can see the drop from yesterday before earnings. And I said in my previous video, if we have a run up to $300 per share, which is pretty much what it did. It came in at $299.29 is where we peaked out, and then sold off a little bit, softened a little bit. We get a much bigger drop. Following the earnings, I said we'd get a sell-off. Following earnings, if it ran up to 300, that's exactly what happened. So it's nice to do your homework and have that kind of stuff work out. So also, I did my homework, by the way, for the Q1 earnings, and I had put option plays on both of those. So even though I was short-term bearish against Tesla for their earnings, that I thought that there would be a bit of a pullback in price, it worked for me. I almost had a 90% gain, so almost double my money overnight with that put option play. And this one I played a little bit looser because I had less certainty. That one ended up being a 25% gain for me overnight, though. So 1/4 more money than I spent by selling to close my position by collecting that premium. I believe it was $480 was the premium per contract, and I believe I sold at $600 per contract, just right about at market open, which when I looked back then, that was a peak of a beat, but being that it's now down to $267, that option premium could be over that $600 amount by this point in time, but I will not scoff at 25%, that's for sure. So Tesla from here, I have them coming in close to $300 to close out 2023, close to $350 to $360 for 2024, and up to 5xing from today's price when we look forward to 2030. And that, like I said, goes along with what Elon told us, that he can see a path to maybe 10x, but 5x. So we'll see if he sees what I see, and I'm being conservative about this. And maybe he's also being conservative by saying 5x. And so maybe I'm on the right path and in the ballpark there. I did say that I would tell you more about Moomoo and how you can get those free shares. So let me pop back over here. So you can get up to 16 free stocks using my link that's down in the description of this video. You'll also find my Patreon link that's down there. But for right now, for Moomoo, 16 free stocks, you make your deposit of $100 or more, 5 free stocks, each valued up to $2,000. And you get $50 cash rewards no matter what deposit tier you fall into. And then also, if you deposit $5,000 more, you get 15 free stocks, 1 free share of Tesla or EXPE, and you still get that $50 cash reward. So check out that link down in the description. Help yourselves out. This offer does expire on the 31st of August, so it is a limited time offer available through my channel. And like I said, you can also find access to my Patreon if you want access to my Tesla stock price prediction, my watch list that's over there, be part of my community, and join me in my private Discord that's also available through Patreon. We'd absolutely love to have you over there and really get the conversation going and looking for other places to find financial opportunities. Thank you guys for watching this video. Like, subscribe, comment, whatever it is, help this channel grow and get it going. I am Dr. Stock, Doctor of Education. Remember, my friends, learning is earning. We will see you in the next video.